Bitcoin has broken out, but if we really focus on this bearish fractal, we'll notice that it's still playing out. It's still very much intact. We have this lower high form. We're still at this lower high resistance right over here. And it looks like path A to B is still very much in the balance. Let's talk about this bearish fractal in a bit more detail. Subscribe to the channel for more videos like this in the future. Like the video if you enjoy these, and let's dive right into it. So going back to mid-September, we were talking about how a relief rally to as high as 29k could occur to see this phase A to B play out, just like we saw right over here, is phase A to B, to revisit the lower high resistance and also deviate beyond the cluster of exponential moving averages, the green 21-week moving average and the 50-week moving average, this purple one right over here. And we've seen deviation beyond these bull market EMAs in the past, and that's something we also spoke about in terms of that relief rally. And these are the technical events from which we tweeted about. We spoke about this overextension beyond the support band here. We spoke about the revisit of the lower high resistance, and we spoke about some key Bitcoin bearish fractal invalidation points. So for instance, the bull market support band holding as a support, because right over here we saw this really get lost as a support, but also a weekly close beyond the lower high resistance. And of course, you can't see point C here, but that was all about breaching 31k resistance. And at the moment, we can't really say that any of those bearish invalidation points have been reached, because we've broken beyond the bull market support band, we've revisited the lower high resistance here, and we of course haven't broken beyond 31k. So nothing has really occurred to invalidate this fractal. In fact, we're still seeing phase A to B play out, and it looks like it's just completed. Phase A to B has completed, and if we speak about where we could potentially still top out, if you focus on 29k, deviating beyond this lower high resistance to see some sort of upside wicks beyond that resistance. Those upside wicks could get us to as high as 29k, and if we can't weekly close beyond the lower high resistance, because now we're at 28,300, 400, if we weekly close beyond this lower high resistance, then we've probably broken this multi-month downtrend. But still, you can see how loads of FOMO wicks and upside wicks beyond this resistance tend to occur. And I just don't want people to get FOMO trapped into these wicks without that confirmation of a weekly close occurring. So weekly close beyond this diagonal is really important. And you can see that we're just at this lower high resistance right now. So perhaps 28,500 would already get us into the clear. So weekly close, anything beyond 28,500 would probably avoid the fate of a FOMO upside wick. But anything beyond 29k and then slinking back below this lower high resistance and even losing these bull market supports as a key stability point, as a support, then we could actually see phase B to C take place. And we've seen this bearish fractal take place across time. We might be seeing it right now. You can see how the path is still being followed. The lower high is still very much intact. We've seen this in the bull market peaking era, but also in 2019, which is probably more of a good comparison here, because this is pre-halving year 2019 and this is pre-halving year 2023, but still nonetheless lower high here and even a lower high here as well, just to turn the bottom of this red box into a new resistance. And the thing about this is that the bull market support band also is one that's deviated beyond. You can see that this is a deviation beyond the bull market support band, and then deviation towards the downside below this support, and then once again, and then once again. And of course, I'm not going to be sitting here and saying that this sort of deviation is going to occur just like in March 2020, which was a black swan event. However, we have to really be open to the possibility that we could see deviations beyond these bull market support bands and below them. and then beyond them once again. So we are currently seeing one beyond the bull market support band, and if we fail to break this lower high, then we'll probably see another one, a deviation, but this time towards the downside, especially if we lose 26k as a support and then turn that into a resistance. At the moment, there's no point in talking about that because we're far away from that. At the moment, the lower high is really important, and part of why the lower high is so important is because this is the moment where Bitcoin needs to reject this area to potentially see a deeper retrace. Because if we break beyond this lower high, and if we break beyond 31k, then we're not going to get that deeper retrace that we saw, for instance, in 2019. You can see here in 2019, we've seen a lower high occur on 2 occasions. And of course, this lower high is a little bit higher than this one, but it's all relative to these 2 price points right over here. So these are still lower highs in this black triangle, and you can see that this is still the predominant lower high to really pay attention to, and we're just at that point right now. So breaking beyond this level, weekly closing beyond it, that would be a bullish trigger, but at the moment we are at this level of resistance. And if you focus on this chart, the next 400 and 140 days actually is the point where we could see some sort of strong downside. The next 140 days going into the halving event are some of the most important days when it comes to trying to bargain buy on a deeper retrace. So if Bitcoin is going to be retracing a bit deeper, this is generally the area that it needs to reject from. So at the moment, the bear fractal hasn't been invalidated. It is on the cusp of being invalidated if we get some bullish triggers, and the invalidation points are earlier on in the video. But at the moment, we can't say that it's been invalidated, even though it might be. You have to be open to this sort of bearish fractal getting invalidated. But until that point, this could still be a relief rally to form yet another lower high. And if that's the case and we reject back into 25, 26k, then once again, we need to really pay attention to that level, because losing that level would open things up to a revisit of the new macro lower high, the macro higher low, apologies, for the first time in this cycle. We've seen that higher low revisit in the past. Could it repeat? At the moment, we're seeing the bearish fractal repeat. But will we see the macro lower high, the higher low, apologies, repeat? That remains to be seen. If Bitcoin is going to reject and see deeper downside, it has to do that in around this region over the next 140 days. In any case, thank you so much for watching. Subscribe to the channel and like the video for more videos like this in the future, and I'll speak to you in the next one. Speak to you soon.